macro point of view, commodity news, short look on the most traded asset, which is gold and crude oil. And with gold, we've got some raised prices after lower CPI than expected, which makes more reassuring that Federal Reserve, as was said by Jerome Powell last week, won't raise rates on the next meeting on 14th of June. And before the CPI, Fed Rate Monitor shows about 80% analytics claiming, expecting rates not to be changed on the next meeting. Now after the CPI, it's 87%, so it raised and it's more assured on the market. Of course, it affects the United States dollar, it affects gold, and what I can see after this last week news from Jerome Powell that they will slow down due to budget crisis, due to banking crisis in the United States, due to lowering, falling CPI rates and PCE, which means now the rates in United States are higher than CPI or PCE. Wow, that's really surprising, and it will probably force Federal Reserve to lowering rates probably on the beginning on the fourth quarter of 2023, which is not so far away, and the market will start pricing that right now. As we can see now, the market price of gold is steady above $2,000. And even that we have had last year an inflation on the mining sector around 20-30%, there was still mining cost much lower than $1,500 per ounce. So over 2,000 as a price will make some profit for mining companies for the gold they mined, which is good. And I have some feeling that for the May, if nothing really changed, the gold will stay above 2,000. That's because the economic value of this gold should be much higher, as we have huge inflation, we have probably stop rising rates in the United States, some countries in Europe also, that outside the Eurozone of course, stop rising rates because some political issues whatsoever. We will see how it's gonna be, but the inflation in Australia, New Zealand, Japan is still under control. United States is falling. Some European countries is also not so bad, at least stop rising. So I think the gold has this year still ahead of it. So it's highly possible that we will see $2,100 in May per ounce of gold. And maybe not this week, but I think we might attack first, of course, $2,070 and then probably rise up to $2,100. We'll see how it's gonna be, and as I claimed on the beginning, we'll go take a look on a crude oil Brent as the second most traded asset. And what we can see right here, the Brent fall a bit further than I was expecting, but it looks like almost the same situation here in March, but take a small differences as the details matters. The lowest priced was above 71, not under 70 like here in March. Now also 75 was a ground for the prices in March to rise up to $80 and then rise on OPEC cuts. We don't expect another OPEC cuts, but here we can see that 75 is solid ground for the prices. So I think we can probably next week, not now, but next week, we might see $80 or SMA 55, which is this violet line here on the chart, as a reaching point for rising oil prices. Why it should rise? The world is worried about the banking crisis, the budget crisis, but inflation is falling, which means the consumers will start using more fuel. In Europe, there's also a huge requests for holidays, which means the jets will be flying and they will need fuel. Lowering CPI will make probably more people traveling by car, so it will be consuming oil. On the other hand, for declining the prices of oil, there is China. The world was expecting more of rise in China export and import to see that there is a local demand for the goods and products, and there is global demand, and there is huge production, enough to fulfill everything. The numbers were lower than expected, yet I think that China didn't say the last word. Now the world is taking a look what kind of influence the China government will have on their estate market, the real estate market, or the production market, and we'll see how it's gonna be. I think we can be more optimistic a bit, as people are probably will likely to spend money instead of saving money, and because the real inflation is slowing down, they might see this as an opportunity, because they will be afraid there will be more expensive holidays next year. So I think there will be enough demand for fuel, and with shortened supply, because May is a month when OPEC started those deeper cuts, so we can see. Also, the rising prices of oil might be affected, might be supported, not affected, supported by the fires in Canada, because on the beginning of this week they shut down over 280,000 barrels of oil equivalent per day of supply due to some fires in Canada. And this number might rise those days, especially if fire will hit some infrastructure. So this will be also supporting the price, so there will be acceleration for rising. That's why I'm a bit optimistic as well for oil to rise up to $80, maybe not this week, but next week. So thank you very much for your attention. Good luck with the markets and have a nice day.